Used car prices tumbled the largest amount since the pandemic. I'm going to be unpacking the recent data that's showing the cracks finally in the used car market. I've been talking about this the last 2.5 years, but we're finally starting to see the cracks wide open in the used car market. If you haven't already, make sure you follow along, subscribe to the channel, and like this video. Cover everything to do with cars, detailing, car reviews, all that. I'm going to be breaking down in this video some of the latest data that we're getting that are finally starting to show, finally, the used car market after this last 3 years after the pandemic, where really every rule that you've ever known just gets thrown out the door. We're finally see some semblance of a reality here, in my opinion, in this market. Because you guys have known, I've been tracking for the last 3 years Audi R8 prices, BMW E46 M3 prices, Miata prices, S2000 prices. I've been just tracking a whole bunch of vehicles, and really, the last 3 years, people have been like making so much money off the appreciation of these used cars. And while there's some cars that I think will definitely continue to appreciate because they are special cars, but there's a lot of cars that are like point A to B daily drivers that appreciated for almost no reason. And I would never think I would buy them for $10,000, some really, really bad, horrifically managed cars. So let's see what's the data suggest. Here we go. Wholesale prices fell 4.2% in June from the previous month. This is the largest monthly drop since the pandemic hit, according to a closely watched indicator out Monday. And so this is the Cox automotive data, and this is the chart made by Axio Visuals. But you could see in 2023, this is the largest drop that we've had since the pandemic at 4.2%. So that may not seem like much, but you can definitely see with this graph, you know, it is on a downward trend. We're having these spikes, but at some point with interest rates being jacked up, and in Canada, we've seen the interest rate rise up over 500 basis points. The US Federal Reserve is also raising rates. And during this time, in this recording, we're in July 2023, we're expecting at least another 25 basis points in Canada. A lot are predicting 50 basis points at minimum, especially in the US. So the credit crunch is starting to happen. The free money is exiting the system. We're seeing all of this excess liquidity really being dropped off. And where did excess liquidity normally go? It went into cars, especially on the used car front, new car front. And we're seeing the used car market take a hit because we're also seeing the new car market take a hit. Now, that's depending on some manufacturers. Some have built out inventory, some haven't, but the cracks are emerging across the entire industry. The prices are finally starting to come down because just the cost to go ahead and finance these vehicles is becoming more immense than we've ever seen before. Now, this is the other thing you must consider. Many used cars, the bulk portion of new and used vehicles, are being bought on credit. About 70% and more of these vehicles are being bought on credit. When credit gets expensive, people have less purchasing power, and thus they cannot pay for these exorbitant prices anymore, and prices start to come down. Now, this is all based on how liquid the market is. So the used car market is decently liquid, unlike, let's say, the housing market, but it's not as liquid as the stock market. So it's going to take some time for these effects to actually flow through the different segments of the market across these different regions to see a material impact to used car prices, you know, in these charts. So while it does only show 4.2%, you got to consider this. And another fact is, so it's interesting, they call out, it's another sign that inflation is easing. Used car prices were a pandemic era inflation poster child. While this is true, and we should all think about, okay, that's great. It's inflation is stopping. That means cars are going to stop getting so much more expensive. Here's the thing that people forget. Prices are not going to come down. Inflation has already impacted prices. So if your car was $10,000, now it's $15,000. Just because we're not seeing inflation anymore doesn't mean that car is getting cheaper for now, right? And that's where we're going to head and see these cracks starting to come out. Because now we're going to go into deflation where prices will start to come down. But so far, we haven't seen clear indicative evidence of it yet. These are simply clues and hints of where the direction of the market is going. Prices fell 10.3% on an annual basis, according to the data. This is from the Manheim Used Vehicle Value Index, which tracks wholesale prices of used cars sold at auctions and typically predicts prices that shoppers see on auto lots a few months later. We're starting to see the cracks. And look, I think it all makes financial sense, right? The economics of it makes sense. We had very cheap credit, pandemic spending, people got stimulus, they went out and spent money. They bought digital assets, they bought stocks, they bought homes, they bought clothes, they bought shoes, they bought everything possible, Bored Apes, with that money, including these cars. Now that liquidity is dried up across these different segments of the market, and we're gonna just see the natural hit. That's all we're gonna see, and this is all literally basic economics of what's happening here. I have to say, COVID threw a wrench into those economics, right? Because so much was going on. Inflation, quantitative easing, interest rates dropping down super low, the immense stimulus that governments spent across the entire world, specifically in North America. Canada put a lot of money out in stimulus. So we had this really chaotic mess of inputs and outputs that were happening that were completely messing up the market dynamics. And what I think we're finally seeing is interest rates are catching up. Stimulus is dried out. People are going back to work. People are experiencing now these high interest rates. They're losing that spending power, and we're seeing that happen across the used vehicle market. And by the way, it's not just affecting this, it's affecting every market that was used in principle, especially markets that were tied to credit. So think about cars, think about homes, think about those things that are tied to credit. They're gonna be impacted more and more as these interest rate hikes take effect. The other thing to know is we're starting to see the beginning of this now, even though, let's say in Canada and the US, interest rates have risen significantly over the last year. We will not see those impacts to people's purchasing power a little bit later, maybe 6 months, 9 months, 12 months later. The thing to remember is it's almost impossible to predict. No matter what these experts say, nobody really knows what's going on. I think there's been too many manipulative moves that have happened in the market with all of this stuff that I just talked about. It brings it almost to impossible prediction, but we can speculate. And my speculation is that we're gonna see used car prices finally start coming down. We're gonna see it happen month over month over month. And I think it's gonna last up to the next year where we just see kind of a rebalancing and correction in these prices. And to be honest with you, it is much needed. Honestly, these high prices put a strain on people looking to buy these cars. And honestly, it doesn't make sense. Some of these cars I see selling for, I saw an E46 M3 completely destroyed. It was a 2002 and I wanted an E46 M3. I'm just going to share an anecdote here. It was selling for $25,000. It had 320,000 kilometers and it was in not good shape. $20,000 for a 20-year-old E46 M3 not in good shape. And I owned an E46 M3 and I bought it for $7,500. Like it was like 6 years ago. And it wasn't in great shape either, to be honest with you, but $20,000 for a not great shaped car or $7,500, just insane. So I think we're going to see this market just completely, correct at some point, probably within the year, in my opinion, maybe even year and a half. But let me know, what are your thoughts? Leave your comments down in the description box down below. I want to hear what you guys think. I just think it's been madness. I've personally seen anecdotally, even Audi R8 prices, which is another price indicator I track, are down 10-15%, right? So we're seeing this adjustment happen in the market, and I think it's gonna finally flush through in the next couple months. So we'll see what happens. But again, hope you guys enjoyed this video. Let me hear what you guys think, and I'll catch you guys in the next one.